Ready for 2024? Julius Baer has just released its market outlook for the first months of the year. Here's what you need to know.
2024 is more about exogenous shocks than something going wrong within the system, which is usually something which has much bigger impact and longer lasting impact. So I think we have to be prepared and prepare our clients and investors that this will be a shaky environment where headlines will actually dominate what's going on, but maybe they will not last, as we've seen in the past. This is transitory things, shocks that then ebb off.
Mm-hmm. Why are US equities, Christian, going to outshine Europe this year?
Well, the US are almost 70% of the global stock market anyway, so they gained a lot of market share in that sense. I think it's more of the profile of US companies, I mean, when you're looking for quality growth, stable growth franchises, you're best served in the US. Has a lot to do with the currency regime. The dollar doesn't allow US companies to devalue unilaterally, to become more competitive. So they have to come up with business models that are fit to kind of stem against emerging markets, which do it on a low-cost basis. So you usually trade up when you go into the US stocks. Therefore, they're not so much depending on the global cycle, with the business cycle of the world is doing. And therefore, it's the ideal and has been the ideal asset class in an environment where there was below average growth, there was uncertainties, rates were up. So I think this is still playing out for the time being. I think it would really need for Chinese policymakers to go all in on their economy, and then we could see tables turn. Until further notice, I think it's about growth, it's about stability, and it's about the US.
Okay, so stay overweight on quality growth stocks. That's the message there. Which sectors?
It's literally almost everywhere, but in particular, if you go into quality, there's a consumer side to it. Very high end consumer is something that is quality growth. Other than that, you have lots of opportunity in healthcare, where you have very, very strong growth franchises, and also. I
love this graphic because it really kind of explains the position.
Yeah, and then what people don't really. Particularly in Europe, don't really think of when we talk about quality growth is really IT and communication. We simply have to face it. These companies have turned into extremely resilient and stable growers, and I've been doing that for a decade more. And therefore, I think it's the hardest for European investors to go into these stocks, the Magnificent Seven or whatever you call them, NASDAQ or so. But the IT communications is and will likely remain one of the hotspots in global investing.
Okay, and our whole market outlook has really dubbed this kind of the new cycle, and there is going to be a turning point, and when that turning point comes, the graphic was suggesting there you can add the cyclicals, but not yet.
Exactly. Yeah, we're waiting for this. And the trouble is, and maybe that's for traders or short-term oriented investors, that's a massive opportunity this year. The market usually, when these turns of the cycle take place, it's usually about several attempts to basically call for the bottom. In other words, you'll see rallies and sell-offs in the cyclical space. That if you're able to capture them, they're very rewarding. Our advice is more for those who want to stick to their positions to go into the quality space, but in between there will be lots of opportunities. And I think, as soon as we see that leading indicators are bottoming and the central banks are actually kind of bringing their leniency in and cutting rates, I think there will be an opportunity. We expect that to happen sometime over summer.
Well, while we're just talking about various asset classes, when you look at fixed income, the message there is, again, also to stick to quality. But we've been saying for quite some time, now is the time to lock in the yields. Is that window now closing? Where are we? Because I feel like we've been saying it for a long time, and yet we're still here with this opportunity.
Yeah, exactly. Well, we had this massive decline in yields. There was a quite a massive capital gain towards the end of last year. So we went from above 5% in the 10-year Treasury to below 4%. That was a massive move in one go. But then, you know, of course, this limits a bit, you know, the upside. I think 2024 will most likely be more about the carry. So you basically hold these assets and you clip the coupon, you receive what is paid out, and then there might be further gains to be made on the way. But for the time being, a lot of that has been immediately priced in.
Mm-hmm. And don't take any unnecessary risks is the key message on our chart there. The Beyond Markets podcast has lots of discussion around key investment topics, and our Moving Markets podcast is a winner when it comes to more regular daily updates on the markets. Both are available wherever you get your podcasts.